Caterpillar manufactures a lot of machines which are used in construction or mining. So let's look at the stock. First, we can see revenue has been kind of flat since 2013. Only recently it has started to rise beyond its usual peak. We can see the same with gross profit. Gross profit has been trending slightly more upwards, so their margins on the product have gotten better. Same with free cash flow, basically no movement since 2013 until recently in 2023. What happened in 2023 that Caterpillar's profits and revenue exploded like that? Well, it has been spending on manufacturing. A lot of construction has started. This is what is keeping US GDP growth kinda high right now. Usually it has always been kinda flat to declining, but now with all the onshoring that has happened, it has brought a massive increase in construction. And of course, Caterpillar machines are used there. We can see this from their sales. The only area where they're currently doing good is North America. We can see Asia down 10%, Europe, Africa, Middle East down 6%, Latin America up 3%, North America up 49%. All the boost is coming from North America right now, so the US. So when we're looking at this giant boost in free cash flow, this is a temporary increase, because once the investment in manufacturing goes back down, it will go back down. No one will need to build factories this much forever, so it will come back to normal levels. I think Caterpillar, free cash flow and revenue will also come back down to normal. There's no reason why it wouldn't be. This is how Caterpillar behaves. The revenue always has peaks, downturn, peaks, downturn, peaks, and it doesn't take a genius to know what happens next when the investment goes down. This is just a very, very cyclical stock. When I'm looking at free cash flow basically being flat at 6 billion over the time, and it only really breaking out recently due to record high investments, then I can just see it will probably come back to around 6 billion. Probably a bit above, because they have done a lot of price increases, but I don't see any reason why it will continue growing at this pace or even stay at this pace. I'm not saying it's a bad company, but it is just a cyclical company. Yes, they can do some price increases, and they have a strong brand. And they have usually done it over time. Their gross margin has increased by 8% since 2013, which is great. But eventually there's gonna be a limit. We can see a rise in margins that fast, like it has happened from 2022 to 2023, is very unusual. And can they keep that up? No, I don't think so. This price increase happened because there's huge demand for the products. Once demand comes down, they cannot charge those high prices anymore. Their free cash margins have also kinda stayed the same. We can see they have not really moved a lot. And once again, they just move with a boom and bust cycle. Yes, they do their share buybacks, sometimes a lot, sometimes less good. We can see once the boom is over, they stop buying back shares. Once it returns, they start buying back shares again. On the years, usually they buy back 2 to 3% of shares, so you have that. But the revenue growth is basically non-existent in the long term. In the long term, they move around 2 to 3% in revenue from the US economy growing naturally, and usually a good time to buy a stock like this is during its down years. And currently, we are not in a down year, we're far from it, we're at the most profitable time they've ever been. What I like about the company though is that they don't make huge acquisitions, a few millions here and there, but on a size of Caterpillar, that is not really a lot of money. Plus, they're not over leveraged, they have had basically 30 billions of net debt since 2013. It has basically never moved. See, they usually use all their free cash flow to pay either out as dividends or buy back shares. The shares are way more volatile, as we saw earlier, but what I'm worried about is at the amount they increase the dividend. They nearly doubled dividend payout since 2014. Meanwhile, if we exclude this year, usually their free cash flow doesn't grow that much. So eventually there will be a ceiling at which they cannot pay out more in dividends. Of course, they could stop the share buybacks, and they still have a big buffer before having to stop the dividends. And yes, they buy back shares, so if they just buy back 3% of shares, they can increase the dividend by 3% without affecting how much they pay out in total. So that is gonna always exist. But at the same time, there's eventually gonna be a time where they have to stop increasing the dividend at a rapid rate like they've done now. Now, what are we gonna value this stock as? I would value it as a cyclical business. But while it is a cyclical, the company has been getting a higher and higher free cash flow ratio. And currently it's at 15, so it's a bit lower. But we can see, despite not growing free cash flow at all basically, the free cash flow ratio has grown from 8 to 20. And even the dividend yield isn't that high anymore. In 2015 it was up to 4% for a company that has very little growth overall. Now when we value the stock, let's say they don't go back to their old levels of free cash flow. Let's say they stay a bit higher. They're currently at 18, but that's gonna go down. Let's say it goes to around 14. So there's still some little growth then included. The company's gonna grow at 2%, in line with US GDP growth in the long term. That's a higher growth than they had all the way until 2023. 3% buybacks, slight slowdown in revenue after 5 years, 17 multiple. And that is still fairly high for such a cyclical company, but it has a great moat. Caterpillar is a great brand. 40% payout ratio. Their payout ratio has always varied vastly depending on if they had a good year of free cash or not. Little deduction due to taxes. We would come to a value of $175 a share. Way below their current value of $281. What if it goes better? The company is just back in growth mode. From now on it's gonna grow at 4% per year. 3% buybacks, slight decrease in revenue again after 5 years, this time a 20 multiple because it's a growing company again. Well, then we would come close, 234. What if growth goes back to maybe 1% in margin increase, plus the 3% buybacks, and a 50 multiple, which would be fairly high at that point for a company that is basically not growing at all. Well, then we would be at 147. Overall, Caterpillar is just a very expensive stock right now. It has not gone free cash flow until recently, and that is only because of a huge historic investment in construction in the US. So I'm passing on the stock for now. A very cyclical company trading at higher multiples in a boom year is just usually not a good investment. Maybe it's time to buy Caterpillar when it is in a down year again, the prices come down, the market is not enthusiastic about the company anymore. Maybe then I would add it, but right now I'm gonna pass on it. What do you think? Write it down below. Have a good day.